British Petroleum, with ticker symbol BP, has just posted Q3 profits of over £7.1 billion. So the stock I want to talk about is ticker symbol ORC, Orchid Island Capital. And if you look here, Orchid Island is paying a dividend yield of 19.07%. What's up, YouTube? Today is the 7th of November 2022. And in a previous video, which I'll put the link in the description section, I talked about ticker symbol BP and how they declared a $7 billion profit for Q3 2023. And I then went on to compare investing in BP with ticker symbol ORC. But I have to say, I've been called out. One of the subscribers to this channel has said that I didn't do a like-for-like comparison of the trade with ORC in that last video and just buying BP. So in this episode, I'm going to do a like-for-like covered call trade comparison between BP and ORC. All right, let's get it. Before we proceed, let's quickly cover off what a covered call is. With a covered call, what you're doing is you are agreeing to collect some premium at the beginning of the call contract for you to accept the risk of selling the underlying asset that you own at less than a future market value in consideration for the premium that you've received at the beginning of the contract. So what this means is you own 100 or multiples of 100 units of the underlying asset. You go into a cover call contract. You receive a premium when you enter into the contract. And for receiving that premium, you have agreed to sell the asset at a defined strike price in the future. If on or before the expiration date of the contract, the price of the asset that you own goes above that strike price, you have to sell it at the agreed strike price. If, however, by the time the contract expires, the price of the asset is still below the strike price that you agreed to sell it, the call expires worthless because it doesn't make sense for the person who bought the call from you to buy the asset from you at a price that is less than the market price. And so you get to keep your shares and you also get to pocket the premium that you've collected at the beginning of the covered call contract. So a covered call allows you to generate extra cash from the assets that you own. What we want to do now is compare selling BP covered calls with selling ORC covered calls and running a quick analysis of what the returns would be. We're going to use the 74-day to expiration timeline as the benchmark for these two covered call contracts. Right now, BP is trading at $33.92. And if you look at the 74-day expiration contract, you will realize that you can sell the 33 strike price of BP at $2.34, which means that there's a potential to make way more than the $33.92 if you buy at that price when you sell a covered call that is lower than the purchase price of BP. Let's also quickly look at ticker symbol ORC and go into the 74-day to expiration contract. Ticker symbol ORC is trading at 10.28 and the $10 strike is selling at 50 cents. This also means that if you buy ticker symbol ORC at 10.28 and you sell the $10 call immediately, you will receive a 50-cent premium per share, which also translates into a profit potential for this trade. Now we want to compare what you would make if you entered into ORC with what you would make if you entered into the BP contract. Remember also that we talked about the dividend that will come to you when you own ticker symbol ORC. So we will expect you to earn two monthly dividends of 16 cents each. What about for BP? With BP, you should anticipate a 36 cents dividend payout per share within the time that you owned the call contract and the shares. Okay, let's look at the analysis on Microsoft Excel. As you can see here, today is the 7th of November 2022. ORC is selling at $10.28, and we said that you could get 50 cents for selling the $10 call that expires on January 2023, and you would also expect to get dividends for 2 months that would total 32 cents per share. If we anticipate fees of just over 5 cents for the transaction, your net margin would be in the range of just above 48 cents. This translates into a 4.74% return on investment for the period of the contract. What about for BP? With BP, price is 33.92. If you sell the 33 call, you will expect to receive $2.34, and you should also anticipate a $0.36 dividend within that 2 month period. Your fees also would be about the 5 cents mark, which means that your net margin will be about $1.72. This translates into just above 5% returns. So you can see that BP can actually give better returns than ticker symbol ORC. This is the value of proper analysis before you execute on a trade, so that you can see what kind of returns you should anticipate for your investment. And it's never a good idea to get stuck in your ways. If something is pointed out to you and new information becomes available to you, by all means, take that information on board and rebase your expectations so that you can make better informed decisions. And you should always be open to receiving feedback. I also want to commend the subscriber to this channel that pointed this fact out to me. This is the importance of having people give feedback based on the videos that they watch. So if you've got further comments on this trade or any question you want to ask, by all means, please leave a comment in the comment section. All comments and feedback are highly appreciated and will be responded to.